Hey everyone, welcome back to Crypto Ninjas. Today we're diving into some really important updates about Bitcoin. There's been a lot of noise in the market this week with Bitcoin price. Wall Street remains bullish, calling 180 to $200,000 top for Bitcoin at the end of this year, and even some classic Bitcoin FUD. How will all of these affect Bitcoin, and what is the expected Bitcoin price in the following weeks? Well, stay tuned to the very end because I'm about to break it all down. Don't forget to like this video, subscribe to CryptoNinjas, and use our Binance referral code on the screen for 20% off trading fees and a $100 bonus. So let's start with the first big headline. Anthony Scaramucci, the founder of Skybridge, was on CNBC just yesterday and shared his perspective on Bitcoin and, more importantly, the new Fed chair that's about to be appointed.
I'm going to say, Anthony, interestingly, a dovish chair is good for your business, is good for crypto, right?
I would prefer Mama Bear. I think Bitcoin specifically is going to be fine in any scenario, but I like the Mama Bear Fed, so hopefully the president will pick the Mama Bear.
So Anthony prefers what he calls a mama bear Fed chair, not too soft, not too hawkish, but someone who can balance things out. Why? Because if the new Fed chair is too dovish, we risk overheating inflation again. And we've seen where that leads in the past. Now, here's an interesting part. Scaramucci also says that Bitcoin will do just fine no matter who the new Fed chair is. And that's a strong statement. He keeps his prediction that Bitcoin could end the year around $180 to $200,000. That's nearly a double from where we are now. His confidence comes from the fact that Bitcoin has become so deeply integrated into institutional portfolios that it's no longer just a hedge, it's becoming a core part of macro strategy. Now, let's put a pin in that and look at another voice from Wall Street. Morgan Stanley's chief strategist, Mike Wilson, was also on CNBC yesterday, and his take is quite different. Wilson is looking at the market through a traditional equities lens, but what he's saying matters also for Bitcoin.
Right now, we're in buy the dip mode because we're in that bull market mentality.
Wilson said that we're in a buy the dip mode because the overall mentality is bullish right now. And his point is really clear. We're in a broad bull market across risk assets, and that psychology benefits Bitcoin just as much as it benefits the stocks. He also mentioned that small and mid cap stocks might see a broadening out once the September rate cut happens.
And that's really going to be contingent, in my view, on when the Fed starts actually cutting interest rates. I don't know if they're going to do it in September or not. But once they start actually doing that, that's when you'll probably see the bull market really broaden out.
But here's the nuance. We have to admit that it's not 100% clear because the last inflation data, especially PPI, was a little sticky.
And what I would say is that we're in that bottoming process. We've been underweight small mid caps now for going on 4 years. Okay, and it's been the right view. And we're starting to see the small mid caps start to bottom out a little bit on a relative basis in the sense that they're not going down at the same pace relative to the S&P 500. That's the beginnings of something, I think.
When analysts use bottoming process, it basically means the worst is behind us and the asset class is starting to build a foundation for growth. He even said it's a great time to start the rotation into midcaps or DCA.
So if we're going to get a consolidation or some sort of correction in the third quarter as we've been expecting, then that's going to be the time when you sort of make the rotation. It's going to all happen at the same period, which is sometime probably the next 6 weeks.
Now, let's connect this back to Bitcoin. Wilson believes that the new feature is going to lean dovish, and markets have already priced that in.
The next Fed chair is going to be somebody who is definitely prone to interest rate cuts, period, end of story. So at what point, maybe it's now, do you and your team already start to factor in rate cuts because they are coming, whether it's in September or whether it's right after May?
Yeah, look, I mean, the stock market is absolutely already pricing in some of that. That's one of the reasons why the rally has been so relentless. And it's definitely been part of our view why we've been more bullish since May.
That's fascinating because it directly contradicts Scaramucci's wish for a mama bear chair. One is saying that we need balance, too dovish is dangerous. The other is saying that markets have already baked in dovish expectations, and that's fine. Both of them are bullish. Both agree that whatever happens, the market is in a good position to grow. And that's what really interesting here. The experts may disagree on the type of chair that we need, but they both see that the future is bright. So, what does that mean for us as an investor? Well, it means that the specifics of who the Fed chair is don't matter as much as the bigger picture in the long run. Liquidity is still supportive, risk appetite is still strong, and the market is looking at every dip as a buying opportunity. That's the exact environment where Bitcoin thrives. Now, before I give you my take on Bitcoin's price, let's quickly address some Bitcoin FUD that's been floating around. You might have seen some scary headlines saying Bitcoin is at risk of a 51% attack because two mining pools now control over 51% of the network's hash power. Let me clear that up. It's mostly fear mongering. Here's why. Mining pools are not the same as miners. Pools aggregate hash power from thousands of miners, and those miners can leave at any time if they feel a pool is acting maliciously. So, just because two pools account for 51%, it doesn't mean there's some secret takeover happening. The incentives in Bitcoin's design make an attack like that highly unlikely, because the moment you attack the network, you kill your own revenue stream and destroy the value of the asset that you are holding. It's pretty much self-defeating. So yeah, do not fall for that one. Bitcoin's security model is battle tested and the community is hyper aware of decentralization risks. All right, let's zoom out and talk about the big picture. Where does that leave us? Here's my take. If you zoom out in the 1 week chart, then you're going to see that Bitcoin is at a very clear trend line. This shows a bullish momentum. Bitcoin managed to flip a huge resistance into support, and right now we are testing that level. If this week's candle closes below $114,000, that means we have confirmed a break and that we're moving towards the next support, which is around $110,000. We're going to see a huge support of Bitcoin price around $110,000 to $111,000. However, depending on the outcome of the September meeting, if the Fed is not lowering interest rates, for example, then we're going to see Bitcoin maybe breaking that level and entering the next support, which is at around $101,000. This is nothing to be worried about because it's a healthy pullback. As we can clearly see, Bitcoin has had a massive run for the past couple of weeks, driving the RSI up to about 70. So any correction down to this support and this support level will drive that RSI down to below 50, and I think that we can start seeing some real reversal happening. So to summarize, I think that in the short term, we're going to see Bitcoin going down to as low as $110,000. That's the next target. And depending on the outcome of the FOMC meeting, if the Fed is not lowering interest rate, for example, then we're going to see around $102,000, $103,000 before a new leg up to the previous all-time high of about $120,000. And if we manage to break the previous all-time high at around $120,000, we're going to see Bitcoin going up to as high as about $135,000. Now, in the 1 day chart, we can see that Bitcoin is approaching a key support level at around $113,000. And we're starting to see a little bounce back in the price. So what I think is going to happen is Bitcoin is going to bounce back to around $117,000, retesting the trend line, the resistance. And after that, it's going to break down to about $110,000. Once Bitcoin is approaching around $110,000, $109,000, hopefully the RSI in the 1 day chart will also approach 30 and below. That personally to me is a good buying opportunity. As you can see in the previous run, Bitcoin approached 30 or below RSI. In this case, I believe around 25 RSI, and it went down just a little bit, right? Creating a reversal in the RSI before hitting a very good run, going up to $120,000 at the all-time high. So I am looking at the same thing happening in this chart this time around. If Bitcoin RSI in the one-day chart approaches 30 or below, I'm going to start buying. And once the chart shows a reversal sign, just like this one, I'm also going to buy at that reversal point, hopeful for the next leg up. In the 1 hour chart, we're seeing some very good sign with the Bitcoin price. As you can see right here, Bitcoin approached 30 and below RSI in the 1 hour chart. And it seems like we're having a reversal when it comes to the RSI. Look at that, lower price, but the RSI keeps on increasing. And just like the one before that, where Bitcoin price also fell below RSI, look at that, below 30 RSI, and the price is getting lower, but the RSI is creating a reversal, showing stronger signs, and we see a huge pump to about $124,000, about 10% from that point. And so we can sort of expect the same thing happening with this one, where we're seeing a very good reversal right now. But this time around, I think the bounce back is not going to be as strong, given how uncertain everything around the Fed and also the interest rate decisions and the inflations and all that. So I personally think that this bounce back will be a little bit lower at around $116,000 to $117,000. And Bitcoin again will continue going back down to $110,000. So overall, these are the key levels that I am looking at. First of all, is this level that we're at right now, which is at $113,000, $112,000. If Bitcoin were to break down through this level, then we're going to be seeing Bitcoin going to this level at around $110,000. If we manage to also break down, then unfortunately we are going to 100,000 or less. I'm going to keep my eyes out for any news in the market and update you guys on the Bitcoin price in the following weeks. But overall, I think Bitcoin price will dip to around $110,000 in the following weeks, at least in September. However, regardless of how many dips Bitcoin have, do not let them scare you. Stay patient, keep accumulating, and remember where this is heading. By the end of 2025, we could be talking about Bitcoin pushing back $140,000. Maybe even not in this year, but in 2026, 2027, where we see interest rate being lowering, then Bitcoin price will still explode to above $130,000. And when that happens, everyone who bought the dip right now under $110,000 will look like a genius. And that's it for today's update. If you found this breakdown helpful, don't forget to hit like and subscribe to CryptoNinjas for more daily insights. And remember to use our Binance referral code for 20% off of trading fees and $100 in exclusive welcome bonus. Thank you so much for watching, and daily out.